Hi dear traders! Last week was the fifth winning week in a row for the financial markets. Investors cheered at the news that consumer prices in the US have finally slowed down, thus signaling that inflation in the world's biggest economy has reached its peak. So market participants have lowered their expectations regarding aggressive steps by the US Federal Reserve and no longer expect a rapid rise in the interest rate. The likelihood of change in rhetoric of the US Central Bank was largely shaping trader sentiment last week. Let's find out more about this below. The US dollar closed last week with losses. The US dollar index, which measures its value against the basket of 6 major currencies, lost 0.88%. However, on Friday, investors took into account the signs of the US economic recovery, confirmed by Michigan's Consumer Sentiment Index, which reached a 3-month high. Finally, markets reacted properly to the positive macroeconomic data, which resulted in the rise of the national currency. At the same time, some members of FOMC reminded investors that the hawkish stance is still in place. Against this backdrop, the US dollar managed to win back part of its losses against the European rivals. So the most traded currency pair on forex, the euro-dollar pair, reached the level of 1.0350 last week. The pair is pressured by fears of the looming recession. Inflation in the eurozone is still far from its peak levels, while a continuous rise in energy prices and the energy crisis are threatening the region. Yet investors hope that the ECB will raise the rate by another 50 basis points at its next meeting in September. This may help the European currency resist the pressure from a stronger US dollar. The Bank of England is also expected to take drastic measures. At its previous meeting, the monetary authorities made a very gloomy forecast for the UK economy, saying that it may enter in the longest recession since the global financial crisis. Naturally, such forecasts had put considerable pressure on the pound sterling. Still, the pound-dollar pair closed last week with gains, reaching the key level of 1.2000. Scandals in the cryptocurrency market did not affect the trajectory of Bitcoin. The number one cryptocurrency managed to stay afloat and even tried to break through the resistance level of 25,000 US dollars, despite the negative background. We hope that investors will keep their bullish bias. In the oil market, traders began to open buy orders more often. Thus, Brent crude advanced by 3.82% last week, heading for the area above $100 per barrel. However, concerns over lower global demand amid a possible recession do not let the crude move higher. For instance, OPEC has cut its forecast for global oil demand by 260,000 barrels per day to 3,100,000 barrels per day. At the same time, investors hope that the Fed will not hike the rate at a fast pace, which means that loans will be cheaper and businesses will continue to develop, thus increasing the demand for energy. Such an optimistic outlook is also true for the traditional safe haven asset gold. The precious metal added 1.41% last week to trade at $1,800 US per troy ounce. These are the major tendencies of the last trading week. Don't miss also our weekly review tomorrow. Subscribe to InstaForex TV channel, leave your comments and questions down below. See you in the next video.